Hello. So, P3 na tayo. Malapit na tayong matapos ngayong SEM. Okay, so tapos na natin yung quantitative techniques. Actually, itong management science is all about decision making, no? Yung quantitative techniques is all about yung quantitative techniques in decision making. And then P2 is relevant costing, which is about short-term decision making. And itong P3 naman is capital budgeting, which is concerned with long-term decision making naman. Actually, na-take nyo na to, di ba? So, na-expect na madali na sa inyo siguro to. Di ba? Okay. So, yan natin yung first lesson sa P3, which is introduction to capital budgeting. So, ano yung mga nandito? Yan. Definition of terms muna. So, meron tayong dalawang category ng capital investments. Meron tayong tinatawag na independent projects, tsaka mutually exclusive projects. Ano yung mga independent projects? Sabi na dyan, projects that are unrelated to each other and allow each project to be evaluated based on its own profitability. Sabi niya dyan, unrelated. So, wala silang kinalaman sa isa't isa. O for example, yung company is nag-iisip siya na magpatayo ng for example, manufacturing branch, 'di ba? Manufacturing branch sa Barangay Masipag, 'di ba? Tapos nag-iisip din siya na magpatayo ng sales agency sa Barangay Maganda, 'di ba? So, yung decision niyang dun sa dalawa is it does not depend on each other, 'di ba? Hindi magdedepende yung pagpapatayo niya ng manufacturing branch doon sa pagpapatayo niya ng sales agency sa kabilang barangay and vice versa. So, hindi sila nagdedepende sa isa't isa. Unrelated. Okay, number 2, mutually exclusive projects. Ano naman to? Means that only one project in a set of possible projects can be accepted. So, isa lang. Nag-iisa lang siya sa puso ng company. And that projects compete with each other. Yan. So, parang nagliligaw. No? Compete with each others. So, ayan. Pipili yung company. So, kung iniisip ng company, for example, meron lang siyang isang land, di ba? O, iniisip niya na magpatayo ng subdivision, no? Or magpatayo ng farm, di ba? O, doon sa land niya, di ba? Iniisip niya kung anong gagawin niya doon. O, so, hindi naman siya pwedeng magpatayo ng subdivision and farm at the same time, no? So, yung acceptance nung isa or yung pag-implement nung isa, ibig sabihin yung isa, i-reject na. Di ba? Hindi na ipipursue. So, yun yung mutually exclusive projects. Okay. Characteristics, basahin nyo na yan. Naulit-ulit na yan. Na-take nyo na yan dati. Capital budgeting terminologies. So, meron usually 4, no? Na, unique. Unique na ginagamit ito sa capital budgeting. So, project screening. Project screening is a decision taken to determine if the proposed investment meets certain requirements. So, i-screen mo yung isang project. O either, pumasa ba ito sa minimum requirements, di ba? Pumasa ba? So, may pondo ba to, di ba? Makakapag-yield ba to ng enough returns? So, yun, project screening. Project ranking naman, once a project has passed certain requirements, then it should be ranked against peer projects. Yun. Irarank mo, di ba? Rank based on what? Based on different capital budgeting techniques. Kung ano yung pinaka magiging profitable, di ba? Profitable in the long run. So, pwede mong gamitin yung payback period, di ba? Sinong pinakamabilis ang payback period o kaya sino ang pinakamataas ang accounting rate of return. So, you will rank the project in accordance with different capital budgeting techniques. Project sequencing naman. Project sequencing, applicable ito kung may sequence yung projects. O, sabi nga dyan, for example, project A, B, and C. Dapat magkakasunod. Hindi ka pwedeng makapunta sa project B kapag hindi mo patapos si project A. Yun, project sequencing. Number 4, capital rationing. The company may have unlimited access to capital in which case it can execute all profitable projects simultaneously. And kung mayaman yung company, walang problema sa kapital. Sige, persumulat yung project na yan, di ba? Pero, however, in reality, firms will have constraints on how much funds they have to invest. So, if there are more capital projects than the funds available, the firm will have to exercise capital rationing and prioritize the projects and first execute those that have highest impact on shareholders' value. Ayan, ito, nagkakaroon ng capital rationing kapag merong constraints sa funds. Ayan. Kapag hindi kayang i-accommodate ng funds yung lahat ng plano, 'di ba? Yung plano na i-project. Oh. So actually gumagamit ka din ng capital ranking, project ranking dun sa capital rationing. Syempre, unahin mo yung mga projects na makakapag-yield ng mas mataas na impact on, sabi nga niyan, shareholders value at yung pasok doon sa budget. Yun. Okay? Next, capital budgeting process. First is to identify the potential projects, estimate the cost and benefits, then evaluate and develop the capital budget and re-evaluate. So, yung concentration natin dito is number 2 and 3. Yun. Pag-aaral natin how to estimate the cost and benefits ng project and paano mo sila i-evaluate. Kung magiging profitable ba yung project, kung maganda ba yung return sa project, di ba? Yun. So, yun. And, ito, napag-aralan nyo na to, I'm so sure. Elements of capital budgeting. So, may 3 elements ang capital budgeting na hindi nawawala, no? Pag nawala yung isa, walang capital budgeting. So, minimum acceptable rate of return on investment or tinatawag din na cost of capital, COC. Yan. Meron ding net amount of investment and cash flows. Okay. So, in this module, we will study about the cost of capital. So, naalala nyo pa ba to? Naalala mo pa? Cost of capital. So, may iba't ibang source yan. Yung capital, di ba? Yung capital na gagamitin natin sa isang project, pwedeng manggaling through long-term debt or through equity. Diba? Long-term debt, ibig sabihin inutang mo yung pangpondo sa project. Pag nanggaling naman sa equity, either nagbenta ka ng shares, preference or common shares. Okay? Or, kinuha mo sa retained earnings. Pwede rin, equity financing din yun. Kinuha mo sa retained earnings. Okay? Or sa yung net income na natira na hindi mo binigay as dividends. Actually, tinagalog ko lang yung meaning ng retained earnings. Yun ang meaning ng retained earnings. Okay? So, may formula tayo para ma-compute yung rate. Yung rate. Yung rate na yon, yung tinatawag nating cost of capital. Okay? So, yun. Sa cost of debt, so hindi to yung cost ng pagkamatay, no? Cost of debt, Cost of debt, ayan. Kunin mo lang is after tax. I-after tax mo lang yung cost of debt. So, let's go to an illustration. Illustration 1. Oh, mga familiar na din sa problem na to. Yun, I'm sure, na-meet yun na itong mga examples na din na to, no? Kasi nga, na-take yun na yung capital budgeting. Okay, Winner Incorporated's current outstanding 12% coupon bonds have a yield to maturity of 10%. Josh believes it could issue new bonds at par that would provide a similar yield to maturity. If the income tax rate is 30%, what is the after-tax cost of debt? So, anong sabi natin? After-tax lang natin yung cost of debt. So, yung cost of debt dyan, either yung 12% coupon bonds or yung yield to maturity na 10%. Alin dyan? Yung 12% coupon bonds, ito yung nominal, di ba? Pero kailangan natin ito, 10% yield to maturity. Yan yung effective interest rate. So, yun yung kailangan natin, effective interest rate. Okay, so i-after tax mo lang yan. So, paano mo i-after tax? 1 minus tax rate. Tapos, multiply mo sa rate. Ha? Ganun lang yun? Yes, yun. So, 7% yung after tax cost of debt. Okay. So, yun lang yung cost of debt. Ito yung pinakamadaling cost of capital. Cost of debt. Pero ang usual pala, hindi ko nasabi kanina, ang usual na ginagamit sa capital budgeting technique na cost of capital ay weighted average cost of capital. I'm sure alam nyo na to kahit hindi na nabanggit kanina. Yun, weighted average cost of capital ang ginagamit na cost of capital sa capital budgeting techniques. Ibig sabihin, combination niya ng cost of debt and cost of equity. Yun, combination siya. So, para malaman mo na, bago malaman yung weighted average cost of capital, dapat alamin muna isa-isa yung cost of debt and yung different cost of equity. So, pangalawa na tayo. Cost of preferred stock. What if yung cost of equity is nanggaling sa preferred stocks? Nagbenta ng preferred stock yung company. So, paano siya kinukuha? Paano kinukuha yung cost of capital nun? So, kunin mo lang yung dividends per share, preferred kasi nga preference pinag-uusapan natin. Kaya yung preferred dividends per share, i-divide mo lang siya net issuance price. Divide mo lang yan sa net issuance price. So, punta tayo sa illustration number 2. Victor Corporation plans to issue some 80% par preferred stock with a 5% dividend. Ayun, meron na tayong dividend per share kaagad. Ayan, 80% par, di ba? 5% dividend. Okay, so ilan yan? Meron tayong 4 pesos, di ba? 4 pesos na dividend per share. Okay, meron tayong 4 pesos na preferred dividend per share. A similar stock is selling on the market at for 90 pesos. Itong 90 pesos na to market price. Okay, market price. Victor must pay flotation cost of 2% of the issuance price. The income tax rate is 30%. Ayun. Tandaan natin na yung income tax rate wala nang effect sa cost of equity. So, bakit? Hindi naman kasi taxable yung sa income tax yung pinag-uusapan natin, ha? Income tax. So, income tax, hindi nakaka-apekto yung income tax sa pagbebenta ng preferred stocks. Di ba? Yun. Kasi nga, ano ba yan? Final tax ba yan? Okay, final tax yan. Ito, regular income tax pinag-usapan dito, yung 30%. Yun, layo na natin. Balik tayo dito. Okay. Yun. Kaya walang income tax rate sa cost of equity. Yun. Basta yun. Yun. And then, i-divide mo yung 4. So, 4 na nga yung numerator mo. Ito. I-divide mo yung 4 sa net issuance price. Ano yung net issuance price? Market price minus flotation cost. Market price minus flotation cost. Kung 2% yung flotation cost, ibig sabihin 2% daw ng issue price. So, 2% ng 90. Okay? So, yung 2% ng 90, so 90 minus yung 2% niya, which is 88.2. Ayun. Or, 90 times 98%. Nabawas na kaagad yung 2%. Di ba? Pares lang yun, 88.2. So, i-divide mo lang yan. Yun na yung cost ng preferred stock. Yun. Next. Ay, ayun na. Next, cost of common stock. Ayun. Yung cost of common stock, so, dalawang forms yan. Either CAPM or DDM. Pag CAPM, tinatawag din yan na yun, CAPM. Capital Asset Pricing Model. So, yung formula niyan, ito. Yung rate is equal to risk-free rate plus beta. Beta. Yun, beta. Multiply mo yan sa market premium. Ano ito yung market premium, ha? Market premium is market premium. Market premium is the market rate minus risk-free rate. Yun, market premium yan. Yung nasa loob ng parenthesis. Market rate minus risk-free rate. So, yun lang. Actually, yun lang. Kailangan mo lang i-memorize yung formula. And then, alam mo na yung gagawin. Okay, punta tayo sa example. Illustration number 3. Panalo Corporation has a beta of 0.8. The yield on a 3-month treasury bill is 4% and the yield on a 10-year T-bond is 6%. The market return is 11%. What is the estimated common equity? Ano yung formula? Risk-free rate. Ano yung risk-free rate? Ayun, meron siyang 3-month treasury bill, 4%. And yield of a 10-month T-bond. Oo. Yan, risk-free itong treasury bill na 4%, tsaka 6%. Pero alin dyan ang gagamitin mo? Nasaan tayo? Nasa capital budgeting. Diba? Pinag-usapan natin is long term. So, doon tayo sa 6%. Kasi 10 years yan. So, 6% yung risk-free rate. Tapos beta is 0.8. Tapos, market rate is 11.5%. Tapos risk-free rate 6%. Yun. So, pag kinumpute mo yan, cost of common equity using the capital asset pricing model, 10.4%. Next. Meron din yung DDM or Dividend Discount Model. Tinatawag din siyang Dividend Growth Model or Gordon Growth Model. Yan. Dividend Discount Model, Dividend Growth Model, or Gordon Growth Model. Kasi si Gordon yung naka-develop. Next. Yun. So, yung DDM, yan, either cost of retained earnings or cost of common stock. Yun. Pag cost of retained earnings, ayan, formula niya. D1 over P0. Ano ibig sabihin ng D1? D1 is the next dividend. Ibig sabihin yung susunod na ibabayad na dividend. Dividend per share to, ha. Susunod na ibabayad na dividend. Okay? Ibig sabihin hindi pa na ibabayad. Yung susunod na ibabayad. Okay? Yung P0 is the current price. Current price. G is the growth rate. Growth rate ng dividend. Sa common stock, ang pinagkaiba lang niya, yung denominator, magliles ka ng flotation cost. Magbabawas ka ng flotation cost. Bakit sa cost of retained earnings walang flotation cost? Ano ba yung flotation cost? Flotation cost is the cost of issuing new shares. 'Di ba? Cost of issuing new shares. Sa cost of retained earnings, saan nanggaling yung pondo? Sa natirang net income. Nag-issue ka ba ng new shares sa retained earnings? Hindi. So, walang flotation cost. Saan merong flotation cost? Sa pag-issue ng preferred stock at sa pag-issue ng common stock. Yun. Doon may flotation cost. Okay, let's go to illustration number 4. Champion Corporation's common stock is currently trading at 40 pesos a share. The stock is expected to pay a dividend of 5 pesos. Okay? At the end of the year, and the dividend is expected to grow at a constant rate of 6% a year. What is the cost of common equity? Yon. Cost of common equity. Ano yung unahin natin? D1. Ano yung D1? Next dividend. Sabi niya dyan, the stock is expected to pay dividend of 5 pesos. So, yan na ba yung D1? Or D0 pa ba yan? Yan na yung D1. So, bakit? Sabi niya kasi, expected to pay dividend. Ibig sabihin, hindi pa siya nagbabayad. Anong gusto natin? Yung susunod niyang ibabayad. Magbabayad pa lang siya at the end of the year. Okay? So, magbabayad siya at the end of the year. So, yan na yung D1. 5. P0, ano yung P0? Yung current price. Sabi naman niya dyan, currently trading. So, current price ba yan? Ewan ko kung hindi yan current price. So, yan, 40. Plus, meron bang flotation cost na nabanggit? Wala namang flotation cost, di ba? So, wag nating isipin. Plus growth rate, given 6%. So, ang cost ng common equity, 18.5%. Ayun. So, ganun mag-compute ng cost of debt, cost of preferred stock, cost of retained earnings, cost of equity. Pero, ang ginagamit niya sa capital budgeting ay weighted average cost of capital. So, paano mag-compute ng WACC? Weighted average cost of capital. So, ito, susunod ng problem. Okay, sabi nga dyan, no? Sa required, what is the firm's weighted average cost of capital? Okay. A firm's new financing will be in proportion to the market value. Sabi niya, will be in proportion to the market value of its current financing. Kaso yung given dyan, carrying amount. Okay? So, the bonds are currently selling at 80% of par. Okay? So, bonds. Alin dyan yung bonds? Siyempre yung long-term debt. Bonds payable. Currently selling at 80% of par. Diba? So, kunin natin yung 80% para makuha yung market value. Okay? Ilan yun? 5.6 million. Wala. Hindi kasha. Long-term debt pa lang. Hindi na kasha. So, yun, tandaan nyo, 5.6. Malaki talaga eh. 5.6 million. Generating a current market yield of 9%. Yun, 9%. 9%. And the corporate tax rate of 40%. Okay. Basahin muna natin lahat. No? The preferred stock is selling at par value of and pay 6% dividend. The common stock has a current market value of 40 pesos and expected to pay 1.2 per share this year. Dividend growth is expected to be 10%. Flotation costs daw are negligible. Okay, so kunin muna natin yung nakuha na natin market value ng long-term debt, no? And then kunin natin yung cost of debt. Ano yung cost of debt? Cause of death ay cancer. And then, ito, 9%, di ba? Tapos, 40% yung tax rate. So, after tax lang natin, no? So, 90% times 60% or 1 minus tax rate. So, yung cost of debt, 5.4%. Okay, next. Meron daw cost of preferred stock. Selling at its par value. Ibig sabihin, itong preferred stock na pala to, selling at par na, yan na yung market value niya. Parehas lang, 1 million. Okay? And pay 6% dividend per year. Okay? Dahil selling at par yan, di ba? Dahil selling at par, ibig sabihin parehas yung par value sa market value. Ibig sabihin, parehas na yung rate niyan. Yung cost of preferred stock. 6% din. 6% din. Hindi kayo naniniwala. Ayan, try natin. Oh, 6% na yung dividend, di ba? Oh. 1 million yung carrying amount. 100,000 yung shares. So, ilan yung par value? 10 per share. Diba? Tapos, 6% yung dividend. Oh, so, 6% times 10. Oh, ilan yun? Kinalculate pa. 0.06. Oh, 0.06, diba? Ano yung formula natin? D1. Okay? D1 over P0. Ano yung P0 natin? P is yung price, market price. Market price pares lang daw sa preference, sa par value. So, 0.6 divided by 10 na yan para tayong value. 6% lang din yan. Okay. Okay, so meron na tayong cost of debt, cost of preferred stock na 6%. Anong pang isa? The common stock has a current market value of 40 pesos. And is expected to pay, sabi niya, expected to pay 1.2 per share. Ibig sabihin, ano ibig sabihin yan? Yan na yung next dividend. Diba? O, dividend growth is 10% per year. O, tapos ito, P0 na ba yan? Current market value, 40. O, yan na yung P0. At wala na tayong problema sa flotation cost kasi negligible daw. So, D1, 1.2, di ba? 40 plus 10% na growth rate, 13%. Di ba? Okay, pero, malinis to. Yan. Kulang pa tayo ng market value ng common stock. Diba? Meron na tayong market value ng long-term debt. Meron na tayong market value ng preferred stock. Market value ng common stock, ilan yon? Market value ng common stock, 40 pesos per share. Ilang shares? 200,000. So, ilan yon? 200,000 times 40. 8 million. Ayan, 8 million. Punta na tayo dito sa solution. So, ito na yun, no? 5.6, 1 million, tsaka 8 million. And then, i-total natin, no? Okay, and kaya nga weighted average, di ba? Weighted average, kukunin natin yung weight, di ba? Yung weight or yung ipoprorate natin, di ba? Kukunin natin yung weight ng cost of debt, yung cost of preferred stock, tsaka cost of common stock. Ayan. So, pagkatas i-prorate, 5.6 over 14.6. Diba? 1 over 14.6. Ayan. Pagkatas mong i-prorate, i-multiply sa cost of capital. Yun. Kaya weighted average kasi kinuha mo yung weight ng long-term debt. Ayan. Yung weight ng preferred stock saka weight ng common stock. And then, i-add mo. I-add. Yan na yung weighted average cost of capital. 9.605%. Ayun. Yun. So Sagutan yung activities. And for any questions, you can send a message no sa GC or sa PM. Okay. Yan. So, na-stress ako, no? Dami. Yan. Pero I think, master nyo na yan kasi nga, na-take nyo na yan, di ba? So, pag matapos ang lahat, yan, sabihin ko lang na kumain ng inihaw. Pero kapag hilaw, may dadapong langaw.